Hi everyone, today we're talking about making money on the stock market. Now first of all, can you make money on the stock market? Of course you can. I make money on the stock market, many other people make money on the stock market. And today, for pretty much new investors probably looking at something to spare money on, invest in something and make money, compound interest, this is the video for you. Now first of all, if you have a lot of spare money in your bank account, it's just pretty much wasting away in there, and that money could go and earn you money, which is a really big thing to help you improve your wealth, and improve it by a fair chunk if you invest it in the right way. And the stock market is definitely one way to do that. I'm going to talk you through pretty much three potential ways you can invest your money in the stock market. I'm going to talk about the ones that I do and trades that I've done to make money in the stock market, so you can tell that I have made money from it, and I'm not just kind of giving you advice that hasn't happened. And also, if you are going to invest in the stock market, make sure you do your own research. It does take a while. It's not an easy thing to pick up. It will take you a while to get the right amount of practicing that you are picking the right companies to be investing in. But I'm going to talk you three of the main investing techniques that you can do in the stock market. One of them is called day trading, the second one is called swing trading, and the third one is called long-term investing. From the titles, if you're new to investing, you might already be able to guess what each one applies, and I'll talk my opinions through it and how each investing would work. So the first one, day trading. This is a investing technique that I do not use personally. The reason why I don't use day trading personally is because even though it's pretty much you're more able to do it now, because a lot of trading platforms have like no commission fees, for example Robinhood, which basically means that you don't have to pay commission on the trades. But there's a lot of risk with day trading. In my opinion, it's slightly a little bit of gambling, but people that do successfully day trade will tell you that it's not. It's more about looking at the technical side of trading. And a lot of people that do day trading pretty much is they will track a stock. They'll look at kind of when a stock reaches, for example, a 200-day moving average, it might be breaking below that, it might be going above it. They look at resistance, so there might be resistant levels of where the stock gets to. Stocks or some movement that is not struggling to get past some sort of trade number. A lot of things, potential news, potential earnings. There's a lot of stuff that goes into it, a lot of technical stuff. But in my kind of opinion, in day trading, it's slightly a little bit of gambling in my opinion, because there's no concrete evidence on that day if that stock is going to be going up or if it's going to be going down. And I think 90% of people that do attempt to do day trading actually lose money. So that kind of says how risky that kind of area of investing is. But like I say, people that do it on a regular basis and are successful, they tell you that it can be done. But the other 90% that have lost all the money that they have put into it will say stay away from it. And in my opinion, I'd stay away from it. I'd play it safe and go for the guaranteed money, which I'll talk about in a little bit. Okay, so number two is swing trading. Now I personally, when I first started investing, I pretty much did not touch swing trading. It was only until I got slightly more confident and experienced in the stock market that I attempted swing trading. So it's definitely not something I'll jump into straight away, but I have known people that have gone into it quite early on. Swing trading is pretty much when you see that a stock has pretty much decreased in value and you think it's a bit of an undervalued stock. You pretty much hold that position for probably, I'd say something probably between 2 weeks to 3 months, whereas day trading is something that you pretty much would hold for a couple of days. Swing trading you hold for slightly longer, but it's not a long-term investment. You think it's just a good price to get in, you can hold it for a little bit and get into it. Swing trading is something that I do a lot more now. Like I say, ages ago I did not do swing trading, but I've got more confident into stocks. And swing trading is something that you can do. It's something that I would recommend that if you are going to swing trade a stock, it's a stock that probably you would not mind holding for the long term in case it does not go the way you plan. That's one thing that I'd say to be careful of. But An example of a swing trade I did was Monster Energy, and one of the big swing trade moves that I do is if a stock does a bad earnings report or some negative news comes out, more than likely an earnings report, but the rest of the company's solid, it's a good opportunity to get in. So I could use Facebook as a demonstration a while back, and Netflix. Those are two stocks that I swung traded. I'll put markers on where I bought and sell. But my latest one was Monster Energy, which did a earnings report, which pretty much took the stock down. I think it was 10%, something like that. And the company is quite solid. It's got a solid PE. It's got a lot of growth. It was still in the 10% growth, which I've talked about how I pick a stock on another video. But I saw the potential in this stock. I saw it had a big dip. I was like, this stock is going to go back up. So I bought in on the lows and I sold in the high. And it's not a stock that you would hold for probably a massive gain, but you'll still make a decent gain on it. And that's pretty much swing trading. It's something that you hold very quickly. You buy on a negative, sell, and then you sell on a high. It's always very hard to get at the right points where you're getting it right at the low and you're always getting it at the high. But like I say, there's a couple of technical sides where you can see where it's a good market to be buying and good market to be selling it. Pretty much where it hits a resistance level on the chart, which I can talk about on another video, is a good point to be getting into. And when you're selling it at a high, in my opinion, it's a lot harder to sell at a high than the low. It's hard to pick the right point, but I've got a few ways of trying to work out where that is. And trying to pretty much get at the point, and hardly any investors get it exactly at the right point, but you roughly try to get it as best as you can, and that's how swing trading works. So the last investing technique you can use is long-term investing, which is one that I use most often. Long-term investing is different for people. Some people, the most successful long-term holder is Warren Buffett, who still holds positions from ages ago, 20 years ago, 30 years ago, that he holds still today. And basically, some people have the term of buying and holding for the rest of their life. I don't use that personally. I try and hold a position for over a year to whenever I feel like I don't want to be in that company anymore. But I'd say you invest it for you have that investment for over a year at least. And the reason why long-term investing is probably my favourite is because stocks always go up. Since World War II, when we had obviously the war, then the stocks have recovered. Then they've always gone up. Since the last recession, the stock market went back up again. So it's very safe to be investing in long term. You never lose money if you keep long term holds. Some people prefer to have a long term hold and invest in dividend stocks. And basically, when they make money from the dividends, then they buy more of that stock, get bigger dividends, and increase it that way. That's one way. Or if you just think that company's got a lot of potential, for example Amazon, and you think, in 5 years, 10 years time, that company's going to be double the size of what it is now, you invest in it for that reason, because Amazon doesn't pay dividends. But you can pretty much look at a company, read annual statements, quarterly reports. You can get a feel of how that company's going, whether or not they're going to be growing. And if you feel that's a company that's going to be growing, then more than likely that company is going to be going up over time. Even if it hits a bumpy ride, it misses an earnings, a bit of bad news comes out. As long as the company is a stable company that's still growing, more than likely that stock is going to carry on growing in share price. If not, and it's making more and more money, and it's just sitting on money, then basically they probably make a dividend or increase the dividend. So you're a winner either way. It's a pretty safe technique to be getting into. And that's pretty much the 3 ways of investing, guys, to be making the money on the stock market. I've shared my opinions on them all. Look into them, see what you think. But those are my three opinions on them all. Like I say, day trading, bit of gambling for me. Swing trading, it is possible to do it at the right times, but I won't make it your primary investing technique. And long-term investing, a very safe, secure investment to make more money from money that you have spare to be invested in something, a bit of compound interest. So that's today's video, guys. Like the video, give the video a subscribe, give the channel a subscribe, and I'll see you on the next video.